This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, we've packed a number of shows together to give you some highlights. I know you're going to enjoy the show. Thank you for being with us today. This is your daily real estate syndication show. I am your host, Whitney Sewell. We are joined again by Peter Richter. Peter, welcome back to the show.
Hi, thanks for having me back.
Today, I'm looking forward to this conversation as well, because we're going to jump into, how do investors receive communications from us through their entire life cycle, I call it, right? They first learn about our company, and then there's, they may get numerous pieces, I hope anyway, of communication from us. But then, eventually they do get an offering as well, or the deal that, that they could potentially invest in. And what does that communication look like? How often? And then, through that process of closing the deal, and then even afterwards. So looking forward to jumping into that. Let's get started and let's hop into, what does that look like, Peter, for you? How do investors, first learn about you all, and, what's the communication look like after that?
Sure. Thanks, Whitney. Well, I think to understand why investor relations is important, you really need to look at what investor relations is and understand its purpose. Ultimately, investors are the driver of the business. Real estate syndication is really a value exchange. The sponsor brings expertise and access to stable, and in our case at InterWest Capital, institutional grade real estate investments, and we make them available to retail investors. Then those retail, or I'm going to call them LP investors, bring their capital. And in return for this exchange, the sponsor gets outside returns, and the LP investor gets access to the deals. And once certain hurdles are met, right, is when the GP or sponsor really gets those outsized returns. The investor relies on our expertise, management skills, and successful execution of a strategy to achieve the projected returns. The first interaction generally with investors comes with an introduction, whether that's them reaching out to you, asking about potential offerings and learning about the company, or maybe somebody in your network introduced an investor. But that's when you describe, the first communication is really an overview of the company. What are you? What do you do? What is your particular skill set, your core competency? And in many cases, what markets are you investing in? It's also, that's your chance to build credibility. You speak to your track record. Track record means a lot. Of course, somebody starting off in syndication might not have a developed track record. So maybe it's important there's other ways to build credibility. And then after you've established credibility and they've expressed interest, they say, keep me in the loop on your next offering. The next step is, once you have a deal under contract, sending out that offering.
Before that, give us some examples of maybe how you establish that credibility, right? Or maybe some, how often are you communicating with investors, or, how many emails are going out, or how, after they come to the website or their referral or however they found you, what does happen then? Is it just emails? Is there a phone call in there as well?
Sure, definitely a phone call. I think a phone call is a great way for them to hear your voice, kind of put a voice to a name. A Zoom call is great, so they can see who you are. They're talking to a real person. But I would caution anybody working in investor relations to not spam people. I think that if you start blasting investors without actionable item, without an offering, if you start blasting them with communications prior to that, they might write you off as spam, or just, people have lives. And the whole point of passive investing is just that, to remain passive. And I think that after an introduction, you speak, you answer any questions they might have. Sometimes show them an old deal and walk them through the deal points. I think it's a great way to get them familiar with your approach and strategy. But after that, I would keep communications to really communicate when there's something that they can act on, whether that's a new fund or an offering of an individual asset, because you don't want to spam them at all.
Okay, so you feel it's important, there's more importance on not spamming or not communicating maybe about things that aren't as important, right? Or filling up their inbox. You put more importance on, hey, let's not just send them anything. Let's wait till we actually have an offering of some kind.
Sure, exactly. Or, if you do a really insightful report, which we sometimes do, on whether it's on a particular market, particular asset class, whether it's the flow of capital. Here at InterWest, we're making a big push to ESG, making our assets more environmentally sound, and trying to have a positive social impact. Sometimes those initiatives are worth communicating, but otherwise I wouldn't bother your potential investor too much.
Okay. All right. So now you potentially have that offering, and how's that going to be communicated? What is that process? Is it email? Is it phone calls, text? What does that look like? And what are you communicating?
Sure. And, just before you have that offering, I think it's important, and you and I briefly discussed this before, but making sure that the investor relations team is working closely with the acquisitions team. There can't really be a disconnect there. Acquisitions needs to know what investor appetite's like. The investor relations needs to have input on what our business plan is, how, they need to understand every single detail of the value add strategy, for example, so that they can effectively communicate that once they send the offering. So it's important to make sure that those two departments are not siloed and that they're integrated, so that when the investor relations team presents a deal to investors, they understand every single aspect of it. And then that brings us to the offering. I think when you present an offering, I usually like to do it in two parts. Like an offering memorandum or presentation, which is usually a deck of the individual asset, in our case, the asset, the market, the comps, but also provide financial projections, because there's different types of investors out there. Some just want to look at maps and pictures and renovation specs. Others want to really dive in to the underwriting, and you want to provide that to both options to them.
Incredible. Speak through that, on through that process, right, of the deal, or, what's being presented to investors about the deal and what they know, or then how you go on through that.
Yeah, so a lot of information is presented, I would say, in the initial offering. I mean, what the asset is, how many units, what market, why you like the market. Everything that you present to them should also be accompanied by why you like it. And if you're not doing that, then you're really just sending out information without any strategy behind it. I also think that investors appreciate a risk summary as well. Let them know what some challenges we might face. What is the risk here? I saw an offering recently for it was a government building, and the risk was that the organization doesn't renew their lease and this commercial property becomes vacant. So I think it's important to present all risks, but also the upside to investors during the offering. And it's also very important to be realistic. Here at InterWest Capital, we are categorically conservative with our underwriting. And that gives investors peace of mind. Instead of them trying to calculate what is the risk, they get to focus more on what's the potential upside that's not highlighted here. Nothing is more difficult than missing projections, or if you're aggressively underwrite a deal and you don't live up to that underwriting, and then you're trying to do a raise simultaneously. So then you're having two conversations at the same time. Hey, sorry, we missed projections, but we've also got a new deal going. So you don't ever want to be in that position. I would rather under promise and over deliver 10 out of 10 times.
No doubt about it, if at all possible, right? I mean, that is our goal, to make that happen. You don't want to have that conversation like you just mentioned, for sure. Let's speak to as well, you talked about, everywhere the investor relations department's involved, right, through that process, right? I think sometimes, like you mentioned earlier, I think it's so important to note here, hey, the acquisitions team and the investor relations, they got to be communicating, like you said, and not siloed. I love how you describe it like that, because it can feel that way, right? I know we've experienced that at times, and we're working hard to improve communications just constantly around the entire team. And so everybody has a better understanding of what is going on. Maybe speak to how you all do that. How do the investor relations know what the acquisitions team is looking at or doing, and vice versa?
Sure. It's something great about the company I work for, InterWest, is twice a week, we have a deal meeting. And during that deal meeting, the acquisitions team goes through basically their pipeline. And we give them feedback, and they also kind of look to us, say, where is investor appetite? And we can ask questions about a particular deal. Oh, what's the incoming supply in this particular market? Are there a lot of new buildings being built? We talk about market comps. That's the first time we get exposure to a deal and we start learning about it. So the idea is that by the time we're ready to create the offering presentation, we know this asset inside and out. We understand the business plan. We understand what the renovation spec, what color backsplash we're putting in. And that, again, we also bring in asset management. They're advising on the renovations and the business operations. So I think integrating all aspects of the company, whether it's 3 people, if it's a small syndication, or if it's 50 people, everybody having input is really what makes, well, I think it adds incredible value to the company and then to the investor.
I love that. Speak to, and this may be a little more technical about the meeting itself, but I think it's helpful. And we've recently done a lot of this, or learning and trying to implement. What does that meeting look like? Who's leading that meeting? Is there a specific department that leads that meeting? How long does that typically last? Give us a few details there.
So the meeting will last anywhere from 30 minutes to an hour. And they have a spreadsheet they put up on the screen, and it has every single deal that they are monitoring, every single asset they're monitoring. And they prioritize it by offers out, or sometimes, we'll have a deal in escrow. I mean, that could be, or under contract, and then kind of works its way down all the way to monitoring. And monitoring is just, we're hanging around the hoop, seeing what happens with this in case someone else falls out. But we go through each one. We talk about the strategy, what's going on with what the brokers are saying. Are we best and final? Are we in the mix? How far off guidance are we? And if it's something of interest, we then pull up the underwriting right there in the meeting, and we discuss what the IRR is shaking out to be. And we, sometimes we'll dive deep in the underwriting, and that's where, from an investor relations side, that's where I really learn the guts of a deal. But it's put on by the acquisitions team, and it's really a collaboration between the investor relations and acquisitions team.
Okay. How long does that typically last?
30 minutes to an hour. I mean, if there's something really interesting and we're in the final stages of negotiating a PSA or a LOI, then we'll really dive deep into a property. We had one just, I guess, yesterday, and it was a little bit briefer. There was, it really depends on what's in the pipeline.
And then, I was thinking through that and how, man, it's so great that more of the team's involved, right? They understand about the deal. But you mentioned then when you all move forward on a deal, you can go and create that investor deck or summary. Different people call it different things, but you all have so much more information to move forward with that. Is the investor deck, say the investor relations, do they own that, creating that, or is that a bigger, thing for the entire team, or what does that look like?
They own that for sure. Ultimately, they're the ones sending it out. Investor relations puts its name behind it. And the results, the raise is the responsibility of investor relations. However, the acquisitions team is very much involved. The market data that's included in that deck comes directly from the acquisitions team. The deal points come directly from the acquisitions team. Sometimes the strategy, if it's a value add, we're getting some of that from asset management. How we're going to staff it, how are we going to execute on our strategy? A lot of that comes from the asset management team. But ultimately, the presentation and the offering is owned by investor relations.
Yeah. Okay. That's great. It's oftentimes where we try to figure out, okay, we need this thing done. Well, who owns it? What makes most sense for who, right, to own this and move forward with this project? And that is something, that investor deck where we go over and over those things, right? Trying to figure out, hey, is it accurate? Is everything correct? Is everything the way we want it? So that's great to know as, investor relations team owns that. Anything else? Go ahead.
Yeah. And I was going to say, I think it's important to play to people's strengths. Your acquisitions team, I mean, we've got guys on the acquisitions team who are just Excel wizards, the way they buzz through it, but they might not be as proficient as, at crafting an offering. So it's really, you got to play to people's strengths, I think.
Yeah. How many people are on your all's investor relations team right now? Maybe speak to, how those roles are split up. The investor goes through all these stages, but do you all own certain investors that you all, you're the investor relations person for this many investors and somebody else does the rest, or how does that work?
So we have, I would say, 3 people on the investor relations team, one of which is he's really focused on institutional relationships. Those tend to be a little bit more sensitive in some ways. For instance, you don't send if we have an institutional investor who's really looking at Class A suburban product, you're not going to send them a ground up development in a downtown area. You do not want to over exercise those relationships. You only send them deals that you think are in their wheelhouse. But otherwise, I would say we all work together. People don't own particular investors. That might work for some groups, but I think that we all bring value in different ways, and why not tap all of our value?
Yeah. Yeah. No, that's great. I've heard it done both ways and just wondered how you all did that. I guess, before we finish this segment, go ahead and speak to maybe some other times where you're communicating with investors through the deal process and then, to the quarterly, to the, selling a project. What does some of that look like?
Sure. So we do a quarterly report, and we call them asset summary reports here at InterWest. And they basically outline our strategy, any deviations from our original strategy. We have a project right now in Arizona, for instance, that we're getting the same rents. It was a value add deal, and we're getting the same rents right now without renovating units that we had budgeted post renovation. So because of that, we're kind of pumping the brakes a little bit on the renovation strategy, because why invest the money if we're not really getting paid for it and we're getting those rents anyway? So that kind of change in strategy needs to be communicated. Investors appreciate it. And it's your obligation above all. They've invested money with you because of the strategy you laid out. If there is any deviation, I believe that you're fundamentally obligated to tell them. It's their money. So that comes out in the quarterly reports. And then towards the end of a deal, I think it's very important to communicate with them, depending on what dictates the end of the deal. So in some cases, it's the maturity on the debt. In some cases, it's just good market timing to exit, whether you're going to refi or sell the asset. I think that's a great opportunity. And again, I think it's important to all investor communications are opportunities. They're opportunities to build credibility, to show value. One thing that I think is very important is throughout the life of a deal, investors get cash flow from investments theoretically. But a lot of their return comes from appreciation. Appreciation is unrealized until you exit an asset or some kind of liquidation event. So I think communicating the appreciation of an asset throughout the lifetime, investors love that, to see that, okay, based on current cap rates and our NOI, what is the value of my investment now? And if you can communicate that, over the 3 to 7 year timeline, I think that they would be much more inclined to reinvest, even if that deal hasn't seen its horizon yet.
Incredible. Great. I love numerous things that you mentioned there, but even earlier, just then you said, if they've invested because of your strategy, right? For what you presented to them early on. I don't think I've heard anybody else say this either. It's like, if that changes, hey, we owe it to them to tell them that this strategy or the plan has had to change and why. And so I like that thought process, and I'm going to even share that with my team probably today. Just need to think about that. Maybe that, we make decisions about a specific deal and it may change our strategy a little bit. We may feel it's best and we may be able to justify it and it be best. But we don't always think about, hey, we should communicate that probably to investors as well. And so I just love that thought process also. Anything else about maybe the frequency of communications before we end this segment?
I think quarterly should be the default, unless there's anything out of the ordinary. I think giving investors quarterly reports is adequate to keep them updated on the progress of their investment. And then, of course, any major event. Like I said, COVID rolled around. We were sending out monthly reports just because of the severity and really the unknown. And we wanted to make sure that they had full visibility. Also, towards the end of an investment, I think it's very important to communicate your exit strategy with them as well. So they're not just caught off guard. Oh, we sold the property. Here's your check.
I've heard, a lot of guys will do monthly reports, right? So why quarterly, not monthly? And how do you answer that question to investors? I'm sure you've had it. So I think sending out, if you're doing monthly distributions, I think sending out a monthly distribution summary could be valuable, but I can't imagine a change in strategy or change in market happening on a monthly basis. I think that it takes a few months to really see the impact of a particular decision, a change in market. I think that if you start communicating monthly when you do have an important communication, it might get overlooked because the last 4 were the exact same and didn't have any relevant information in it. My opinion. That's opinion. People might have different opinions. I would hate to, it's kind of like a boy who cried wolf scenario, where if you over communicate, then when you do have something really important, it might get overlooked. Yeah, I love that. I like how you mentioned too, hey, if you're doing monthly distributions, maybe you do send out a monthly distribution strategy, you said. I like that thought process as well. I could see that being very important to investors. We're going to jump even more into that communication, that quarterly report that you all send out, maybe even the communication on a deal, maybe a specific deal. I mean, what is included? Let's jump in there, and whichever you feel is best to start with, whether it's the quarterly communication and how you all do that, or a specific deal. Let's dive into some of those communications.
Sure. Well, let's go chronologically. I think that the first major formal communication is the offering deal, right? The presentation. And that's where it is extremely important to take the financial projections and turn them into a narrative. And you have to communicate, and you have to understand the sophistication of your investor base too. My communications are much different with our institutional investors than they are with our individual investors. The institutional investors don't want the communication to be flowery at all. They want numbers, and that's it, really. And they do their own underwriting. They do their own market research. Individual investors, which I think is really the target audience of the show for people starting syndications for retail investors, I think it's important to really walk them through every of the deal. Explain to them, some of them might not understand how an IRR works. You have to explain to them what an IRR is. Explain to them exactly what the strategy is, why you like this particular strategy for value add. Why are you going to be able to get a premium? Because you're putting in new washer dryers. How do you know you're going to be able to get that premium? We've done our market research. Units of the same size are getting X dollars more per square foot with washer and dryers. So again, you can present it all on a spreadsheet, but the financial projections on a spreadsheet. But unless you're able to effectively translate that into a narrative, it'll be difficult to really gain the interest of your investor base. And of course, people love maps of the areas, pictures of the post-reno spec of the asset itself. We often have investors ask if they're in the area, if they can go visit a property. And people like to know that they're investing in a real asset that actually exists, that isn't just on paper. So show some pictures, I think, of the amenity spaces, of the unit interiors, of the leasing office, of the landscaping, and really remind them that they are investing in a real asset that exists. It's really what differs from buying a stock, or it's some piece of paper that's floating around in an account somewhere. These are real assets, and it's important to communicate that.
You talked about presenting. I love that too, as far as you must translate the spreadsheet into a narrative. I like that thought, and being able to do that is true. Many people are going to look at that spreadsheet, that are more experienced, or maybe they've invested in lots of deals, and maybe even your team, right? You can look at that. You've talked about it enough. You understand what's going on. But that retail investor, maybe this is their first investment into a syndication, or maybe they've done one or two, but they look at that and they're confused, right? And if an investor's confused, typically their answer is no, right?
Right.
They
Exactly.
don't move forward. And so who owns that as far as, even that narrative and building that out and ensuring that? I assume it's investor relations team, right? But how do you all figure that out as you go through that process? I know you are meeting twice a week, like we talked about during the last segment, but maybe walk through even creating that investor deck and, translating that spreadsheet well. What's that process?
Sure. I mean, that process is really owned by the investor relations team. You need people who are strong writers, who can effectively communicate. If you have, and I hate to get too granular here, but if you have sentences in your presentation that don't really have any substance to them, enough of those will lose interest of an investor. You should really think of each sentence. What's the purpose of this sentence? What are we doing here? Is it repetitive? Is it redundant? If it is, get it out of there. I saw a presentation recently from another firm, and they had a section on there that said transaction highlights. And within the transaction highlights, they talked about the market. This, strong job market because some big employer had moved to the area. And I think that's a great example of what not to do. Transaction highlights should be transaction highlights. What is the debt looking like on this property? What is your exit? Basically, what are you paying for the property per door, per square foot? I think it's important to really be focused. And if you're not focused, you're going to be all over the place with that communication. And so transaction highlights, those should be the asset summary of the assets, market summary, what's going on in the market. I think that creating a communication of the deck is great, and also have some summary pages where at a glance, an investor, because again, some investors will want to read every single word of your deck, every single word of your correspondence. Others want to see a table, cash on cash return, IRR, length of investment. So I think it's important to have both options available.
Yeah, that's incredible. Have an at a glance segment. I like that a lot because we definitely have that as too. Some investors are like, which page of the deck do I need to go to see this? Right. Even though there's a table of contents, right, as well, they could probably figure that out. But still, they don't want to have to look through the entire thing. There's some specific things that are important to them. And we wanted to make it as easy as possible. Right. Okay. So you've sent that email out to investors, walk through, are you all calling them as well at that time? And I'd love to dive into even the capital raise process a little bit with you, but I want to stay focused on the communications, on this segment. And so we're kind of exhausting this as much as we can. But, anything else on the email or the communications about a specific deal that we should know about, or, hey, as an operator, you need to be including these things as well. How are you doing that?
Sure. I think the offering communication is 3 parts: your presentation deck, the financial underwriting, and the email itself. And the email itself is where you really talk through the deal. I mean, it's a lot of text, but it has to be done. Why do you like it? What's the strategy? That might be sometimes redundant from what's in the deck, but I think that's okay. Also, I love including a table, a return table that shows cash on cash return, like we mentioned, at a glance, that they can see it. So you send that out to investors, and then you're beginning the capital raise process. I think it's great, depending on how many people are on your team, to either use a Google Sheets or some way to track the equity commitments. And
do you all use Google, like a Google form, or do you have a CRM that can do it?
So we have a investor management software called IMS, which we're very happy with, but we still do use Google Sheets just because it's real time. Everybody has access to it. But yeah, I also, depending on the size of your company, I highly suggest getting some type of investor relations management platform. Juniper Square is a great option. IMS is another. I think there's a few others out there, but it really functions as a CRM.
Right.
I mean, it creates a portal for them to log into.
Yeah, I'll give a shout out to InvestNext. They're a group that we've used for a number of years now, and I really like as well, but agree, could not recommend having something like that. Having that secure portal just kind of helps you to be at another level, right, of operator for your investors.
Absolutely. Yeah. And then again, being able to log into a portal makes you feel a lot less transactional, like, oh, I'm giving you money for a distribution, more I'm investing in an asset that I can view anytime. I think having a portal is a great tool. So send out that original communication, and then you'll start getting the responses. And it's important to track who's responding. Sometimes our portal actually will track who's opened the email. So if somebody hasn't opened the email, maybe that warrants a phone call. I tend to shy away from fundraising phone calls, and I'll tell you why. We all sit around and we get those spam likely phone calls on our phone dozens of times per day. And I almost feel like a phone call to raise capital, depending on your relationship with the investor, could be somewhat of an invasion of privacy in a way. I don't want to say invasion of privacy, but a disturbance. The beauty of emails, they can read it on their time. If there's late at night and they're watching TV, they can open up the offering and take a glance at it. But a phone call is it's not part of my strategy. Some people might do it, but unless you really have a relationship with somebody where that phone call isn't a burden, if they're just an investor and you don't have a personal relationship with them, I would think about maybe withholding the phone call from the fundraising process. Again, it's really important to track. Once you track everybody's initial, we call them like a soft commit. People say, okay, I'm interested at 50,000. I'm interested at 250,000, whatever it is. You track all that. And then, once you're within that original communication, you have a commitment deadline. And then once that commitment deadline is reached, then you send out the partnership documents. And that includes your PPM, your partnership agreement, which sometimes is a exhibit to the PPM, depending, and your subscription agreement. And then they give them a few days to review that. You never want to send out those documents and then expect them to be executed the next day. People don't like to be rushed. People want to take their time, especially, again, they're investing in some cases a lot of their, personal capital. You want to be understanding that that's a big commitment for a lot of people, and give them time to read through the agreements and answer any questions they might have. And then I usually wait 5 to 7 days later and then send out those same documents via DocuSign for execution. And then along with that, usually wire instructions and a funding deadline.
Okay. No, that's incredible. Let's jump to that quarterly report a little bit as well. I want us to be able to talk about that before we get too low on time, because it's so important we're communicating well. It's so important that our investors are up to date, which we've mentioned so many times, and because it is so important. But I'd love us to think through how you all create that report, who all is involved in that communication as well, and maybe ways you all have streamlined that process also.
Okay, definitely. And, as we mentioned in the previous segment about integrating all team members, we call it an asset summary report, but quarterly report, a lot of the heavy lifting is done by the asset management team. They're the ones who know exactly what's going on with the property. So they are heavily involved in that. They draft quite a bit of it. And the quarterly report, or whatever you want to call it, really is your chance to update investors on what's going on and kind of go into detail on any budget variances. There will inevitably be budget variances to pro forma. Things happen. Nobody's ever exactly on the dollar when they're sending out their original pro forma. So explaining what's caused those variances, positive and negative, I think it's, again, an opportunity. And what are we doing to correct the negative variances? Also, if it's a value add, that's a lot of our business, so I keep mentioning value add. But if it's a value add strategy, how many units have you renovated? What is the premium you're getting on those units? Again, hopefully that's a positive item to correspond and they're happy with the increase in rents. But so how you executing the strategy, and ultimately how is cash flow impacted? And also on those reports, I think it's important to have, again, similar to the original offering, some kind of summary page, a page that for the people who live very busy lives, they can look down one page and see what's going on with the property. And then for the rest of investors, if they want, they can delve deep into the details in the following pages. But so I think it is important to have
a summary section.
Yes, have some sort of summary section. Don't make it too wordy, something somebody can read in 5 minutes or under. And really, cash flow has to be mentioned, because really, in the end, that's, to a lot of investors, that's the most important metric, is how is cash flow impacted, and obviously distributions as well. We distribute here at InterWest on a quarterly basis, so that is where we discuss distributions as well.
Awesome. Peter, I'm grateful for just how you've given back so much time to us and the listeners over the few segments that we've recorded. We've gone into so much detail about investor communication, and it is so important. It's such an important part of our business, and any real estate investment business, or any investment business really, but that we communicate well. And I'm just grateful for your time and laying all of that out. Tell the listeners how they can get in touch with you once again.
Absolutely, Whitney. Thank you. It's been a pleasure. My name is Peter Richter. I'm Director of Investor Relations at InterWest Capital. You can reach me at peter@interwestcapital.com.
Thank you for being with us again today. I hope you have liked and subscribed to the show. Please tell your friends about the Real Estate Syndication Show, and I hope that you are learning and growing. Don't forget to go to lifebridgecapital.com, where you can start investing today.